Hello, you're watching Btva's Business Nigeria, and I am Tunji Andrews. Today, we will be taking a look at the following stories. Now, historical data shows that in the last 30 years, GDP has only exceeded inflation twice and was on par once, meaning the nation has hardly had any real growth in the last 30 years. And 2015 is set to go the same way. I've also been following the Tiger Brand story ever since the exit of Dangote from the board of directors of Tiger Brand Foods. We will also take a look at female entrepreneurship in Nigeria. But first, let's take a look at the top stories making the rounds. Tosi, what stories are making the headlines today?
Tunji, these are the top stories making the rounds. The petroleum profits tax collection for the year has dropped by $390 billion from a target of 1.48 trillion to 1.09 trillion naira. The acting executive chairman, Federal Inland Revenue Service, Mr. Babatunde Fowler, has said state governors have resolved that a sum of $150 million out of the $400 million of Nigeria's liquefied natural gas dividend should be shared among the three tiers of government according to the sharing formula being used for the Federation accounts. Nigeria will inject $250 million into its sovereign wealth fund, an official said on Thursday, making the first contribution since last year as government savings slightly improved despite a plunge in oil prices. The money will come from recent proceeds from liquid natural gas exports. The wealth fund had not received fresh funds since the previous government injected $1 billion in 2014.
Thank you, Tosi. Joining me in the studio is Btva Head of Research, Adegboyega Ola, today, and we would be looking at the ACTIS story. The sale of IKEJA Mall to the South African Real Estate Investment Trust, Hydroprop Investments Limited, and ATAC Limited, a Johannesburg-listed real estate capital growth fund, reflects the strong retail opportunity in West Africa and the interest of quality institutional investors in sub-Saharan real estate assets. Boyega, looking at that, the purchase of IKEJA City Mall, you want to ask how many Nigerians are going into such, profitable kinds of real estate, because it's good to build houses. You go all through Victoria Island, you go through the suburbs, the areas of Ikoyi, you see a lot of high-rise, empty buildings.
But you don't see shopping malls.
Exactly, you don't see shopping malls. This is activity.
But the thing is this, you have Persianas. Persianas is actually the 100% owner of the Palms, which was the first shopping mall of its type. Persianas has also replicated that same activity in various states of the Federation. You've replicated it in Ibadan, in Enugu, in Kwara State. So you actually do have this type of activity, but it's not so much the activity. It is, I would say it's more of the employment opportunity it brings, the congestion, not necessarily congestion in terms of traffic, but the human traffic that it brings and the opportunities that it brings to developmentally that specific area where the malls are located.
No, but also you want to look at the rent factor of the buildings. I mean, one of the, you have heard in the past talks about the fact that the McDonald's business itself...
It's basically a franchise business. You're not selling burgers, you're selling real estate.
Real estate.
Yeah, but the thing is, particularly for malls in Nigeria, most malls are built with the intention of having an anchor tenant first. Now, that anchor tenant basically would be the tenant that drives traffic. And what they realized, particularly with the success of the Palms, is that the anchor tenant that usually drives is a ShopRite, or it's a ShopRite or a Game, or other retailers like KFCs and co. Now, and the reason why that is so is simply because ShopRite basically came and turned shopping going to the supermarket into a social activity.
Well, we're seeing a lot of them being set up across the state and even across the Federation.
Yeah.
There's one being held up somewhere in Lekki towards the Aja axis. There's still another sort of mall coming a little bit closer to the present city mall. I mean, this mall is coming up around the country. Is this the drive for real estate in the next coming years?
Yes, most likely, yes. It is. Unfortunately, ACTIS that looked at that opportunity basically looked at it and said, we have about 3 or 4 investment opportunities in Nigeria. and they've basically exited all. ACTIS, for instance, was a co-partner in establishing the Palms, which was built for about 40 million. They've exited that. They've exited IKEJA after 4 years. IKEJA was built for about $100 million US. They probably invested about 60 million. They own 60% of that, so they've exited that. You have Jabi Lake Mall, which is under construction, which is about 130 million US. They own 88% of that. So, you know, so for them, it's more a case of, are there opportunities and can we exit profitably?
I'm looking at the housing deficit.
Yeah.
Is there an opportunity there?
There is, but the housing deficit, the opportunity in the housing deficit is for low-income houses. What you particularly have in Nigeria is sort of a congestion of middle to high-income, you know, so houses that retail for about 50 million and above, whereas where the opportunities would be in between 10 and 25 million.
All right, thank you, Boyega, for that. We'll be taking a break, and when we return, Tosi Olasende and I will take a look at the GDP numbers. Do not go anywhere. You're still watching BTVA's Business Nigeria. Now, renowned economist Arthur Okun postulated a relationship between GDP growth and unemployment. The law, now called Okun's Law, states, and I quote, that when unemployment falls by 1%, GNP rises by 3%. Another version of Okun's Law focuses on the relationship between unemployment and GDP, whereby a 1% increase in unemployment causes a 2% fall in GDP. Now, for illustration, if the potential rate of GDP grows by 2%, say, Okun's Law states that GDP must grow at 4%, a 4% rate for 1 year to achieve a 1% point reduction in the rate of unemployment. Interesting facts, right? Now, based on Okun's Law, are we seeing any significant relationship between GDP growth and job creation? We'll be talking about that with Tosi Olasende. Tosi, let's start with the numbers. GDP numbers came out a couple of hours ago. Could you just run us through the numbers?
Yes, Tunji. Nigeria's gross domestic product grew by 2.84% in the third quarter of 2015. You know, this was about 0.49% higher than the 2.36% growth it posted in the second quarter of 2015. I mean, that was like the lowest growth they'd seen in 10 years. If you can see the slide, you can see that there's a gradual decline from 6.23% in the third quarter of 2014 to 2.84% in the third quarter of 2015. You know, the IMF forecasted that Nigeria's growth is going to be at an average of 4%. Consider that we had just 3.96% in the first quarter of this year, 2.35% in the second quarter of this year, and 2.84% for the third quarter of 2015. We will need a growth of 6.9% in the fourth quarter to post an average of 4%.
So, see, I need to ask you something, though.
Yeah.
I mean, if you look at the numbers there, you would notice that second quarter GDP was actually lower than third quarter GDP.
Yes.
But if you look at all growth, all GDP growth, it was in recession first quarter, second quarter, fourth quarter 2014, first quarter 2015, second quarter 2015, and then it turns a positive, and that takes us higher than GDP of Q2. How did that come about? I mean, the graph there speaks about just a 10 to 80%.
Yeah, I mean, the graph speaks volume. I think the nice thing about this is that in the third quarter of 2015, the macroeconomic environment has not seen any improvement. However, there's been better security in the northeast of Nigeria. And also, we've seen an improved production in oil. Also, you've seen the oil GDP. I mean, for the past fourth quarter, this is the first time it's posting a growth. It has contracted over the past 3 quarters. And this quarter, we've seen a growth. I mean, the composition as well, the oil is contributing 10.3% of the GDP, whereas non-oil is contributing 89.7%. In Q2 2015, that is the last quarter, the oil contributed 9.9%. So clearly, that also attests to the growth of 1.06% we see in the third quarter of 2015. All right, on the next slide, we're talking about the oil production. In the last quarter, oil production was 2.07 million barrels per day. However, in the third quarter of 2015, we have 2.17 million barrels per day. Yet again, we're back to better improvement in leakages and also a better security in the Niger Delta. Looking at the contribution to real GDP, services contributed 49.7%, agri contributed 28.79%, whereas industries contributed 23.61%. And also the real growth rate by sector, there has been a gradual decline across the three sectors, that is agriculture, industries and services, some more aggressive than the other. For instance, in industries, Q3 2014, we saw a growth rate of 5.43%, but in the second quarter of 2015, it declined by 3.31%, and in this quarter, it's 0.13%. So the decline has narrowed.
But basically, what we're seeing is that the non-oil economy is still relatively weak.
It is relatively weak. The non-oil economy is the key driver of the economy, and it's shrinking. You can see it now in the Q3 2014 was 7.51%. Q2 2015, that is the last quarter, dropped to 3.46%. Q3 2015 dropped to 3.05%. And that also puts a lot of responsibility on the new government on how they can jumpstart this gradual decline we've seen in the
So basically, as we're seeing with the
growth.
if we're supposed to look at that, you see that with oil prices falling, Q4 could actually be a lot worse than we saw in Q2.
If nothing is done to kickstart the non-oil sector, which is the key driver of the economy, yes, we might see.
I think you still have one more slide, right?
Yes, I have one more slide to go. And also, we're looking at the GDP quarterly growth rate by sectors. Interestingly, education is one of the fastest growing sector for the Q3 2015, followed by finance and insurance, which posted 6.6% growth, and the arts and entertainment and recreation, which posted a growth of 5.3%.
I'm seeing there are a few sectors in recession.
Yes, public administration. It contracted yet again. It posted a decline of 12.8%, and in Q2, it declined by 10.6%. Public administration, the sector is on
Well, you know, speaking about Okun's law that we were talking about earlier, I mean, if you want to look at the fact that a 1% decline in unemployment, the employment rate actually leads to about 2% reduction in GDP. It should actually concern policymakers that if people lose jobs, GDP will shrink, and if GDP shrinks, people will lose jobs.
Yes.
So I mean, it works hand in hand. You lose jobs, people will go. Now I'm looking at the numbers in front of me. We did speak about it earlier that in the last 30 years, GDP has only exceeded inflation twice, with it coming at par once. And we're talking about in 2004 and 2007, coming in par in 2006. Shocking numbers, and let that sink. Tosi, any other numbers you have for us?
I mean, the job creation data is coming out on the 22nd of November. Then we can also see the link between the Okun's law and see how far we can take that.
I expect that we're going to see a larger rise in unemployment figures if the GDP numbers are not improving significantly. Thanks, Tosi. Now let's take a look at how the markets are doing. Welcome back. Joining me in the studio is Chioma Ukonu. She's the COO of Recycle Point, and Adia Atuluku. She's a co-founder of Muse Origins. Also joining us is Tosi Olasende. Entrepreneurship has great potential, but I want to ask this question. Let's look at the complexities of your businesses. You are co-founder of Muse Origins, so you're trying to bring, it's sort of like an online marketplace for arts and culture.
Yes.
Arts basically, you know, inspired by Africa. So it's pretty much an online business. And I expect that getting people to come on your platform will be a little bit, it's easier, because I think for recycle points. You're more out there.
It's a field work.
Exactly. You're more on the roads. You're talking to people on a daily basis. People are seeing you, and they expect a recycle business to be a guy's business. So, forgive me. I mean, you naturally think that, wouldn't you?
Yeah, being a lady, recycling business is actually, it needs patience. To be able to, collect, count the bottles, count the can, guys like, what's all this? Let's, pack everything in and let's go. But women have that patience, excuse me. So that allows me to do the work more effectively. And then when I go into the neighborhood where I work, where the recyclers are, when they see it's a lady, like, oh, so and most of the recyclers, a high percentage are women, because they are the ones that do these whole collections at homes and all of that. They don't have patience.
Now, I think one of the things I want to ask is, I mean, it's nice if a lady is doing a business that is online, talks about arts and culture. Is there a ceiling in terms of negotiating of prices that comes in? Because, I mean, generally, a guy wants to look, okay, it's nice when we're still talking 1,000, 2,000. Yeah, a million? I'm not sure I want to do business.
You raised something first, so let me take that first. You said as an online business, you would expect me to not have as much legwork. And funny enough, when we were entering into the business, we had that same expectation. But because maybe because our target sellers are people who are lower income artisans who are not as tech savvy as they could be normally, we are saying that we have to do a lot more legwork than we expected. So you actually have to go to the markets, go to the roadsides, go where people are, trying to exhibit, and actually talk to them, and even bring out the computer and walk them through it. So there's a lot of discussion because people are not as tech savvy in Nigeria
as you would expect them to be.
Yeah.
Tosi, you were at WIMBIZ recently. What were the takeaways?
I mean, it was all about, the theme was leadership, that is step up and stand out. And it was examined, it also spoke about how women should explore different different spaces and different sectors, and they should ensure that they outperform. So it was more about honing your leadership skills and going into the world and taking position. I also want to pose a question to the ladies. Speaking about financing, the word out there is that women have a lower access to finance in comparison to their male counterparts. Has any one of you experienced that?
For sure. In my experience, not really. In a way, because right now we are seeing a lot of opportunities actually targeted at women in particular, which is interesting and probably wasn't there about 5 years ago. So it's a really, really positive change, But the one funding issue that probably also affects men as well as women is that, for example, we are basically News Origins is basically a technology company, and a lot of tech companies we don't expect to make profits the first year, maybe not even the second year. But funding in Nigeria, a lot of people try to,
try to get their funding,
exactly.
They want the
revenue right now. There's no patience. So that's a major issue for us.
And yourself?
Okay, I believe, like she said, I'm going to build on what she said, the situation is getting better. With all the grants coming up here and there, entrepreneurship grant coming up here and there, focusing on women, and also women organizations like WIMBIZ, We Connect, and all of that coming up, 20 million entrepreneurship programs, all these programs springing up here and there to help young entrepreneurs, especially female. It's better. I can say it's a better situation now for us financially.
I think we'll continue to follow both businesses. I'm interested in yours because I tend to throw away a lot of plastic bottles, and I'm also interested in arts. Well, thank you very much for being with us on the show. We'd like to have you soon in the future. We hope you'll be joining us again. And thank you, Tosi Olasende, for being with us. We'll be taking a short break, and when we return, Boyega will be here with me to break down the issue with Tiger Brands. Do not go anywhere. Welcome back, and joining me in the studio is Adeboyega Olatunde, our head of research. Boyega, the Tiger Brand story, is it an issue of doing business in Nigeria or a Dangote flour issue?
Tunji, when I saw the article in the papers and they said it was a Nigerian misadventure and the CEO resigned because of that, I said, same thing. Is it doing business in Nigeria or was it Dangote Flour? Now, the details. Because Tiger Brands basically invested in 3 companies in Nigeria. The first was Deli Foods. Now, remember that Deli Foods was bought in 2008. A significant stake in Deli Foods was bought in 2008 by Oros Capital. Oros Capital sold that. Now, they manufacture McVitie's. So digestives, hobnobs, rich tea that you see that's produced locally is manufactured by Deli Foods in Nigeria. Now, they bought into Deli Foods in 2011. Now, the purchase consideration ranged from in between 18 and 35 million US dollars. But Deli Foods is not quoted, is not listed, so there's relatively very little information about profitability and how that investment is doing. However, they bought in the same year, bought into UACN Foods. Now, as we know, UACN is arguably the largest or one of the largest conglomerates in Nigeria. Now, but they bought a 59% stake in UACN Foods. Now, UACN Foods produces very well-known brands. It produces Gala, Swan Water, and Supreme Ice Cream. Those are the premium brands that it produces. A lot of the activity in UACN Foods is actually Gala. Now, that 49% stake, we were at no point given any indication as to the value. However, UACN Foods was valued in the books of UACN at about 2.23 billion, which gave us an estimated value of about 2.17 billion. Now, it's currently valued at 2.32 billion, and they have generated a cumulative profit. Now, we're looking on year, because they own 49% of it. What we've decided to do is strip UACN Foods down into a separate entity from UACN. And what would the profit be if you assume that 100% of the profit, whenever they earn $1 million, 49% of that is going to Tiger Brands? Now, year on year, they would have actually made 779 million naira in 2011, 892 in 2012, 900, almost $1 billion in 2013, 718 in 2014, and 425 million. Cumulatively, they would have earned about 3.76 billion naira in profit from investing in UACN. Now, that, if your investment size is what, 2 billion, that's fantastic. But the problem now is you now have the biggest transaction that they pursued in Nigeria, what I call the albatross, because that's what they eventually became, Dangote Flour. Now, at the point where they bought Dangote Flour comprised of Dangote Agro-Sacks, Dangote Noodles, and Dangote Pasta. It was a 63.5% stake, 35% stake, was bought in 2011 at 950 kobo for approximately 30 billion naira. That was $182 million. Now, that stake is currently valued at 6.2. So you've lost the market cap 24 billion. You've lost about 80% of that. Now,
so is the problem, was it valuation or management? What exactly caused the issues?
Now, the interesting thing is the cumulative loss since that investment is what? 19.753 billion. Now, when you look at year-on-year performance, ever since they have bought, at no point has the company turned a profit.
So what exactly is the problem?
Now, is it a case of management? Possibly. I believe it was a case at that point of maybe they actually wanted to get into that space and they probably overpaid. But if you look at, these are losses. Now, their share of the loss in 2012 was 2.5 billion. In 2013, it was 5.3. In 2014, it was almost 6 billion. 9 months into the year, the share of the loss this year, because the losses is over 9 billion for 9 months, is 6 billion. At some point, you're going to ask yourself, when does it end? If I brought in 30 billion into a company, and this excludes capital commitments, this is just how much they paid Dangote, so that's a purchase consideration. You haven't started talking of things like me bringing in money to improve operations.
I want to ask though,
and you've lost
prior
90.8 billion.
Prior to the purchase, was this company profitable?
It was. Surprisingly, it was. For about 2-3 years, it even paid dividends.
So that means it must have been a change in management at some point.
No, I sincerely doubt that it was a change of management, because the truth is, Dangote still retained a holding. He retained 10%.
But not necessarily management.
No,
holding a particular share of the company doesn't necessarily mean...
You know, the thing is, he wasn't involved in day-to-day management. But the truth is, you do not go from being a profitable company to a consistent loss-making company in a year.
So, Boyega, do you think Tiger Brand is cutting their losses?
Yeah, at this point, that's what I feel. If you had gone from an investment of 30 billion and the cumulative loss that we had seen, take a look at this. Now, this is UACN Foods. Mind you, this investment here was valued at what? 2.3 billion, thereabout. And cumulatively, you could have earned, if you had resumed, taken out all the profits, you would have earned about 3.7 to date on your 2.3 billion naira investment. Now, Dangote Flour, 30 billion, mind you, you would have lost
19.7.
19 billion. Now, remember what I said, that 30 billion is just a purchase cost. It doesn't include things like capital commitments, expenditures that they've made in terms of improving processes. So it's actually a lot worse than this. This is just an analysis of how much loss that they've accumulated based on the performance of the company. I think
they need to still come out and explain to shareholders and people in general exactly what is the problem.
But in 2013, the CEO admitted, and it said that the company was overvalued.
Yeah, the CEO did admit it. Now, the challenge you have at that point was, it made, when they were entering Dangote Flour, it made economic sense. Why? You have Deli Foods, you are a biscuit manufacturer. You have UACN Foods that manufactures gala. Now, the key constituents of both biscuits and gala is obviously flour. So for them, it was a backward integration play. Now, in terms of acquisition targets, who could they have targeted? Flour mills, out of the question. You had Honeywell Flour also, owned by Obaltijeko, probably out of the question. Grand Cereal and Oil Mills, owned by UACN.
How does this tie into job losses, though? Because I do expect that if there's going to be a write-down, a close-down of some sort.
You know, the surprising thing is they haven't said anything about people losing their jobs. I think it's a case of just inefficiency. There are certain things wrong, inherently wrong with. I don't want to believe it's management. Because
whatever it is, somebody's going to lose his job.
Somebody has lost his job already, because the CEO has resigned already.
Yes.
Well, speaking about Dangote, though, we did hear about the fact that he is not in Mali, considering the issues that are going on in Mali right now, the hostage situation happening in the hotel which he stayed in.
He was in the hotel yesterday.
He was in the hotel yesterday, but he is out of Mali right now. He did tweet about it today. So luckily, Africa's richest man is safe. And also, I mean, the thoughts on my mind at that particular point was, if that had been, we probably might have sent the military and the Air Force and the Navy to rescue him.
Yeah, but it's still disheartening, though, to think that 170 people are held in hostage in Mali. And just getting the daily, minute-by-minute update about that, it's quite heartbreaking that this continues.
Well, you do remember that is where this issues in West Africa started, when Nigeria went in to try to help out, and that spread back into Nigeria, and we had an escalation of the Boko Haram issue. But I mean, it's an issue that is global. France just experienced its own share of it, but we'll just continue to hope and stand together to see that terror does not win considerably on the Nigerian plain. But also, we are following stories that the CBN Deputy Governor, Sarah Alade, has come out to debunk statements coming out saying that the central bank will be restricting dollars to the interbank market. Basically, good news, guys, because, I mean, that's part of the issues. We're talking about GDP numbers today, and you've been hearing a lot of manufacturers complain about the fact that they've had issues in terms of getting the FX. So we do not want to see any more restrictions around that. There was an article from Bloomberg quoting an unnamed source saying that the central bank might restrict dollar inflows into the interbank market. But MPC, Monday, Tuesday, guys, Do you think that the MPC will be deceived by GDP numbers climbing up in Q3?
I see them holding the rates. I mean, South Africa and Nigeria in a sort of similar situation in the sense that our currency both getting devalued, and the rand is also under attack. Likewise, contracting growth. I mean, South Africa's GDP also contracted, and we experience a slowing growth. However, South Africa raised its rates by 0.25 basis points, but I believe that Nigeria will hold rates. I don't see any raise or any drop in rates, but I see it hold.
Boyega, Mario Draghi was on the news today saying, I will give you inflation.
Yeah.
Inflation in Nigeria is about 9.3%, and liquidity in the economy.
We've had enough of inflation, Tunji. You said earlier in the program that we've only had real growth. Now that means you've only had growth that's exceeded your rate of inflation for what, 3 years out of 30. That's poor. That's very poor.
That's right.
Well, what I'm even saying is inflation very high. Over 1 trillion in the system in terms of liquidity.
Yeah.
Do you think we will try to cut rates to mop up that money?
The challenge you have with cutting rates is this, Tunji. You want a situation where your money market instruments or your fixed income instruments provide a real return, right? Now you have inflation at 9.3, 9.4. Your money market fixed income instruments range in the yields of 10%, 10 to about 12, 13%. Thereabout. So, and remember that your money market rates all take their direction from NPR. So you can't. For now, you can't.
Well, thank you very much, Tosi Olaseyinde and Boyega Olatide, for being with us on the show. Thank you also for joining us. That's the much we can take on this edition of Business Nigeria. Till next time, keep doing business, Nigeria.